Welcome on into our show. This is Lowcountry Money Talk, where we talk, well, pretty much everything money that you need to know. Revolutionary Financial Group expert Phil Bloyd is with us at the desk.
Yes.
Hi, Phil.
Hey, how you doing?
I'm good. I'm
All right.
really good.
Good.
We have a lot, we always have a lot to get through.
A lot today.
Particularly today, though, it's the end of the year. We're starting to really wrap things up. We have a lot to know. So
Right.
for our investors, our retirees,
Sure.
what should they be thinking about
Okay.
right now as we wrap up the year?
Let's look at some year-end things. Okay, so for year-end things, of course, if you're over 72, it was changed a few years back from 70 to 72, from 70 and a half to 72. So just make sure you know that at 72, you can do April 1st following your 72nd birthday, but if you're 72,
Okay.
let's look into required minimum distribution.
Yes, all right.
If you miss it, it's a 50% penalty.
That's a big one.
Yeah, so if you're not sure, call your investment firm and say, hey, did I take my required minimums for the year or whatever, because if your minimum's 10,000, you don't want a penalty of 5 because they're gonna make you take the 10 anyway.
Right, okay.
So required minimum distribution.
You want to do that.
That's one thing. Let's look at tax harvesting. So the market's been down a lot lately, and it's because a lot of people at the year end, if in their non-IRA account, they may have some capital losses, and they may want to take some of their capital gains, offset the losses to zero out those gains, and maybe buy some different positions. Is something I might look into doing right now. But tax harvesting, that's another thing.
Okay.
Roth conversions. Okay, so the current tax code that we're under, it sunsets in 2020, at the end of 2025. So after 2025, the 2026 tax year taxes will go back to the way they were 8 years ago, and that means they're going way up.
Okay.
So
Lots to think about.
Roth conversion.
Lots to think about. Okay, well, that's good to know though, because we have a little bit of time. We want to make sure we get these things accomplished.
Okay, right.
Now let's talk a little bit. We've used the R word a few times on this show because economists have shared concerns about a global recession. We had our 2 negative quarters. But we did show some improvement. So third quarter looked okay. We started going up. Does that mean can we take a load off? Can we breathe?
No.
No, okay. I had a feeling you were going to say
So in
that.
the third quarter, we had a gross domestic product of 2.9%, meaning that we were up. The 2 previous quarters, we were actually negative, which indicates recessionary. So we had a little bit of recession there. It was broken up in the third quarter, but most people think it's going to be back at least the first quarter, if not the fourth quarter of this year and the first quarter of next year. So the consumer price index came out at 7.1%, the last report. It was down from 8, but remember that means the inflation is 7.1 over where it was last year.
Right.
So that's still really high.
Yes,
And the
very.
Federal Reserve continued along with their promise of raising the federal fund rates to right around 4.5%. In that meeting, they also said that their target is to keep those rates at 5.5 sometime next year and hold them there for quite some time.
Wow, okay.
So that's the rates that banks loan money to each other at and go to what they call the reserve window or whatever.
And we had been experiencing such lows. We got used to that, but it's time to go up, I guess.
So that's trouble. So all that, if you put all that in a big bunch, the first quarter of next year is probably not going to start off too great.
That's what I was worried about. Okay, so what we'll do for our viewers at home is we're going to talk a little bit about what to do, right? So we can do something.
Sure.
We can make some moves, and that's why you're here. You're going to walk us through some of that. One thing you definitely can do if you're watching this and you want to just have somebody take a good look at what you're doing with your money, you can take Phil and his team up on a revolutionary wealth review. And that's really just where you take a deep dive, you call in, you talk to Rachel, you make sure you get set up. You want to have at least $500,000 in investable assets.
Sure.
But you'll take a look at it for them.
Well, what we do is we've got to see where you're at. We'll look at fees and expenses inside your investment account. If we can lower those, that's a good thing, right? And then we'll look at your holdings and kind of see where you're at and are you prepared for the market, 1, the market we're in, and 2, the market that's going to be ahead.
Right, absolutely. Well, I think that's a good thing to do. Another good thing to do would be to stay with us because we've got lots of great information for you here on Lowcountry Money Talk. We'll be right back.